Nvidia added almost $200 billion to its market cap after hours. In today's video, we're going to talk about the S&P 500, the NASDAQ, the dollar, the bonds, and the VIX, and what is next to happen with the stock market. All right, so without further ado, let's get started with the video. $2 billion expected, which is also really insane. So Nvidia said it's expected about 11 billion plus or minus 2% in the current quarter, far surpassing Refinitive's expectations at $1.06 per share at 7.15 billion in sales. So they completely eradicated any of the expectations. Nvidia's data center group reported 4.2 billion in sales versus expectations of 3.9, a 14% annual increase. But this is basically caused, this entire move is caused by Nvidia, and these chip stocks are needed to train AI. So which basically Nvidia said that the company's performance was driven by demand for the company's GPU chips from cloud companies as well as large consumer internet companies, which use Nvidia chips to train and deploy generative AI applications like OpenAI's ChatGPT. Every single AI application, anything, any sort of AI application, you need to use chips. And these high-powered chips are basically the backbone for any of these AI developments. So that's why these companies are skyrocketing at the moment. That's why Nvidia did really, really well. So the other thing is that net income for the quarter was 2.04 billion versus 1.62 billion from the same period last year. This is a 25% increase from this quarter from the last period last year, which is insane. So this is definitely causing the entire market to basically skyrocket. So before we go into the charts and looking at Nvidia, the chip stocks and tech stocks, let's take a look at FOMC minutes. So we also had FOMC minutes today, and Fed officials lean toward pause in June, but they're not ready to stop. So the majority of the Fed officials at the moment, they said that they would like for a pause. So several said that more tightening may not be necessary, and some said more increases would likely be warranted. So it sounds like the center wants to stay put in June, meaning they don't want to add to hikes in June. But it's very interesting. I'm going to show you guys what the calendar, or what the CME groups, like the Fed's calculations for a rate hike chance changed after these minutes. So I do not support stopping rate hikes until we get clear evidence that inflation is moving down towards our 2% objective. What ended up happening was the majority of the Fed members were saying that they want to pause hikes, but it's not a guarantee that they're going to pause it again afterward. And they're going to continue basically until inflation comes down. That was essentially the minutes. And when we take a look at the target rate probabilities for the June 14th meeting, remember this. So basically, currently, we're at 500 to 525 basis points. Okay. So the odds of us remaining here actually fell. So after the minutes, this percentage dropped over 10%. So we were in the 70s. We were in the mid 70s yesterday. Now we're at 64%. And this percentage means 525 to 550. That means that we would get a rate hike. This percentage went up, which is very interesting. And then what ended up happening was, when you look at the July meeting, again, by July, it's 40% chance that so this is by July, like starting now, by July, it's a 40% chance that the rate will remain the same it is a 46.5% chance that we will get a rate hike, a minor rate hike. And then it's a 13% chance that we're going to get a larger rate hike, by even more basis points. So based off of the minutes, the majority of the Fed members were saying, oh, we're going to look for a pause. As soon as that happened, the target rate probabilities for June and July for a pause actually went down. So it just goes to show that there's a lot of discrepancy in what's going on and what's being shown in the news. And it's just very interesting because this is the Fed watch tool. This is a very, very important metric that tracks this stuff. And it's just interesting to hear what they say in the news versus what is actually being shown in terms of like data and numbers. So yeah, we're getting a higher chance that we're going to get an increase in rate hikes basically after these minutes. All right, so now let's take a look at what the hell is happening with Nvidia and what is basically the next steps for these tech stocks. So Nvidia shot up from 305 and then it hit all the way up to 390 something, 395 today. So it shot up over almost 30% after hours based off these earnings. And it's mind-boggling, honestly. So this basically, it's at a new all-time high. Can't really do much technical analysis on Nvidia. It's at a new all-time high. Nvidia is also getting a lot of love based off of the news from AMD is also getting a lot of love based off of the news from Nvidia. So it's also up pretty substantially in the after hours, comfortably up almost 9% or almost 10%. So AMD is also up, right? But now it's also going to affect the other large tech stocks as well that were touched by AI. So Microsoft, for example, is also doing well. It is basically back to this level of resistance here. And the after hours, Google is also doing well. It's shot up also. So in general, right? Now, when taking a look at what the NASDAQ is doing after hours, the NASDAQ is also obviously bounced very substantially here. It's comfortably above. It should be closing. It should be opening above 335, 336 by the time we open tomorrow. And everything right now is bouncing based off of the strength in the chips. And because of the strength in the chips, Microsoft and Google are also doing well. So this is really, really unprecedented strength that we saw out of Nvidia, which is pretty interesting. There's not really much else to talk about at the moment for the chips and tech stocks, honestly. We can take a look at Apple. Apple isn't doing great in the after hours. It's not like, it's nothing truly, it's not like mind-blowingly huge move. Tesla is not really, it's not really reacting as heavily either. And then also Amazon is not like, Amazon, Tesla, Apple are not doing huge, right? They're not making a huge move in the after hours. So very, very interesting. We have to take a look at the SPY now. So the SPY basically is getting a bit of love only because there's a lot of tech stocks in the S&P 500. So it's getting a bounce, right? So now, in my opinion, for the SPY moving forward, what needs to end up happening is if this move to the downside is going to continue, right? Overall, all day, we were very bearish on the market, right? We got a gap down. I was showing how yesterday we would need to hold a certain level for a bounce. That never happened. And now I was explaining how 413, 412, and then 410 were going to be major levels of support on the SPY. We gapped down below support, and then we comfortably just fell. We failed at 412, and then we just comfortably fell all day, and then we bounced into the into lunchtime basically. But what my thought process for the SPY now is, we need to see how the SPY responds at 415 to 416 if we get there, because currently right now, after this huge move in the NASDAQ is up pretty substantially in the after hours, and these large tech stocks are also up pretty substantially in the after hours, but the SPY is not getting that much love. So we need to see how the SPY responds at these prior resistance levels at 415 to 416. That is going to really determine whether or not we get another, basically this is going to be a pullback for a continued move down, or if we can comfortably break higher. Like basically this 415 to 416 level is going to be like a make or break, very important level in my opinion on the SPY. Because if it can continue skyrocketing here, that means that the large tech stocks are going to be helping pulling the SPY up. And because this is going to be the main factor in whether or not the SPY continues moving up, the strength in the NASDAQ. So the strength in the NASDAQ is going to be the main factor of why the SPY continues going up. And this 415, 416 level, the fact that after all of this, the SPY still has not crossed above that level in the after hours, shows that we need a lot more strength in the tech stocks for it to break up. Does that make sense? So that's why I'm saying this 415 to 416 level is going to be very, very important. And if we get a break above this, then 420, then 418, and then 420 are going to be the next levels of resistance. After that, obviously, then the 421.50 level that we need to fill the gap on is going to be important. But in general, this whole area is going to be an area where bears are going to want to reload into shorts for another leg down. And essentially, we're going to need to see if that ends up happening. But this earnings out of Nvidia really, really just blew everything out of the water. So, but the fact that Nvidia and the tech stocks are doing so well, but the SPY is still being held down, shows that there's still a weakness in the SPY. So that's basically my thought process, because another thing is the Fed watch tool actually lowered its probability that we would get a pause. So there's, I mean, basically 415, 416, that is like the main level that I want to see hold as resistance. And we also need to take a look at the IWM. It's not doing spectacularly. Obviously, yesterday's candle was a very, very big reversal candle, and we've continued falling lower. In general, the market is bearish. The SPY is definitely bearish. We need to see how it responds at these levels of resistance, and the IWM is not helping. The only chance that the SPY really has is the strength in the tech stocks or in the NASDAQ. All right. So the only other things that we need to take a look at are the bonds, the dollar, and the VIX. All right, so this is the 30-year bonds. We know that the bonds generally have a correlated relationship to the market. If the bonds are showing a lot of strength, it is not good for the overall market. So they have a pretty correlated relationship in general. All right, so if the bonds are showing weakness, that means that the overall market should also be showing weakness, specifically the NASDAQ. And as this continues falling lower, it's not a good sign for the bonds. We saw how the bonds and the short interest basically on the bonds is at an all-time high, which means that people are very, very bearish on the bonds. When taking a look at the dollar is continuing to skyrocket up, and we know that the dollar also has an inverse relationship to the market. If the dollar is doing well, that means that the stock market should be falling. And currently the dollar is continuing to show a lot of strength, which is not good for the equities market or the stock market. And last but not least, when taking a look at the VIX, the VIX is continuing to skyrocket up here. We're now starting to get a bit overextended to the upside on the VIX, but we can continue falling. We can hold these levels and continue grinding up, but we know that the VIX also has, similar to the dollar, the VIX has an inverse relationship to the market. So if the VIX is doing really well, then that means that the market should be falling. And that's basically exactly what we saw today. In general, you know, the SPY didn't have that great of a day. The SPY clearly fell. And now what's interesting is that the SPY held this downtrend level very, very perfectly. And initially this was that same downtrend level that we broke out of, that was acting as resistance from back in May 1st. It had multiple touches, and then we got a explosive move to the upside, which led to us retesting 420. So then we ended up coming back and retesting the same level. And now, you know, I don't really put that much emphasis on downward sloping levels of support, but in terms of resistance, they act as resistance really well. But in terms of it holding as support, it's not really a reason for me to go long. But so far right now, we could see that it held as support and it's bouncing. So it's gonna be interesting to see. We basically now have a gap to fill for tomorrow at 413.68, which is the low of this May 23rd. So we need to see if we can fill that gap up. And essentially, so far so good. We were on the right side of the market. We did not go long up here, and now we need to see how the market responds around 415, 416. And tomorrow is going to be really, really interesting, because we need to see how the market responds to Nvidia. Are we going to get a big sell-off? Are we going to hold up there? Is Nvidia going to act the same way as Microsoft and Google are now, where Microsoft and Google had really good earnings? They never fell down. So Microsoft and Google just kept going up. They never got a retest back to their prior price points. So now, is that going to also happen to Nvidia? That is basically going to be a very, very interesting thing to see. But aside from that, not much else to look at. Tomorrow morning we have GDP numbers coming out in the pre-market, so that's going to be interesting. But yeah, really interesting stuff. This Nvidia move was really, really crazy. But aside from that, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I will see you guys bright and early tomorrow morning in the live stream, where I day trade and everything live for you guys. So yeah, take care. Have a good one. Thank you.